Now, on May 31st, we make a sale to Winners Inc. Sold them 300 pairs of jeans for a total amount of $30,000. So we're going to process this transaction. At the same time, we received $80,000 from Jeans Boutique. The entry, if you wish to see what it is, simply debit the checking account to $80,000 and credit the accounts receivable. You can only post transactions using the receipt module. So we process this transaction. And at the same time, we also have another receipt from Costco, and Costco paid us the full amount. And the entry will be the same, debit the bank, and I'll just demonstrate it quickly. Debit the checking bank account 50 and reduce the accounts receivable by the same amount. So we process this transaction. Now what happens is, if we look at our income statement from the period from the 1st to the end of May 31st, and we're asked to prepare financial statements. Because we're asked to prepare financial statements, we need to analyze our aging schedule. And our aging schedule for the end of the month is as follows. So we'll need to analyze the aging schedule, and we will do this using our Excel spreadsheet. To record the recovery of bad debt, our journal entry is debit allowance for doubtful accounts $10,500 and credit recovery of bad debt $10,500. The fact that we credit an expense, this will increase our profit by $10,500. Now we're going to process the transaction, and let us see the effect on the balance sheet first. Balance sheet, now we showed the same amount of $50,000, which is our Winners of $30,000 and Jeans Boutique of $20. It makes a total of $50, and our allowance is now $2. The net realizable value now is $48,000. On our income statement, if we go to our income statement for the same period, we will note that we had $80,000 in sales. Our cost of sales was $32, and here we have an $8,000 in the bad debt expense, but not as a debit, but as a credit, which is a recovery, and it increased our profit from $48,000 to $56,000. Thank you. Here we will demonstrate the write-off. Jeans Boutique, we received a letter from our trustee in bankruptcy that the customer will no longer be able to pay our $20,000. We must use our sales module, except this time we will be as a credit, and you will see the effect of the journal entry. The journal entry is debit allowance for doubtful accounts and credit accounts receivables. The moment we post this entry, you will note that for our income statement, let's go there first, from the 1st to the 30th, there is no effect. If you compare this with what you had seen before, there is no effect. That journal entry has no effect on our income statement, but it does have an effect on the balance sheet. And let us see what the effect on the balance sheet as at June 30th is. The accounts receivable used to show 50. If I go to the GL, remember we had 50, the $20,000 is credit. Now our new accounts receivable balance is 30. The $20,000 from Jeans Boutique will no longer appear. But look what happened to our allowance for doubtful accounts. Remember you originally had a credit balance of $2,000. Now we debited 20. We have a debit balance of $18,000. You can never have a debit balance of $18,000 of any amount on the allowance for doubtful accounts as a provision. The provision is always a credit balance. So we will need to complete an adjusting entry for this, and we will demonstrate this in a moment. To adjust the allowance for doubtful accounts from a debit of $18,000 to nil, we need to credit the account, and the difference is that we debit bad debt expense. So the entry is debit bad debt expense $18,000 and credit the allowance for doubtful accounts for $18,000. The effect of this will be that our income statement will have had an increase of $18,000 as an expense. In other words, we went from a credit of $8,000 to $18,000, and our balance sheet will no longer show, let me go here, balance sheet will no longer show the allowance for doubtful accounts, except now will show only $30,000 because the $30,000 is current and there is no provision to provide. Thank you. This was a really complicated scenario, and I know the video is a little longer, but go over and reread the text. Hopefully a lot of it will make sense. Thank you.